Hello and welcome to Business Television India. I'm Abhishek Ranjan and you're watching The Financial Planner. Joining me on the show is Feroz Aziz, Deputy CEO of Anand Rathi Private Wealth Management. Today on the show, we talk of, again, 2019. Now, as we enter into 2019 after a volatile year, now we are likely to witness a number of unpredictable variables that could impact the markets. Now, we have Feroz with us who will help us identify and gauge the factors that could be at play and that will dictate how the economy and markets fare in 2019. Feroz, if you could bring out the few factors that you think should one be watching out for as far as 2019 goes.
See, to 2019 will have several factors. Of course, at every point in time, market has something to look forward to. A positive news or a negative news or a macroeconomic variable which can give the next leg of move, either upward or downward. So if you have to pen down a few important variables which will dictate the fate of 2019, especially for equity as an asset class. Of course, those same variables will have an impact on other asset classes as well. But equity being one growth important asset class, it's important to understand what are the variables which will influence it. Point one, of course, elections will, which we spoke about in the last show as well. Elections, of course, have an impact because the continuity and status quo markets have an affinity towards status quo generally. So we think that general elections will be one thing you'll have to watch out for. You have to also watch out in the first 4-5 months of this calendar year. I think the strategy is going to be different of the current government, especially when it comes to farm loan waivers and putting more stress on the banking system is likely because the themes in which the last three general elections or the state elections which BJP lost, the three major states, were on the basis of farm loan and the MSP bit. I think that's where the banking system can have little more stress because of the farm loan waivers. That's point one, because there's no clarity of how there will be a compensation to the banking system for these waivers, and there's not so much transparency there so far. Point two, which will dictate the market, at least from a capital liquidity flow, will be the reaction of Fed and the rate movements upwards, because there could be, if Fed increases rates at a faster pace again in 2019, there could be flight of capital from the emerging markets to the debt side of the US bonds. Because point two which I'm making is Fed, you will have to watch out for what the reaction of Fed is. And that will dictate some degree of liquidity, especially from one important source which owns 35-40% of our largest index free float, which is FII. So that's the second important item, Abhishek.
All right, and also there are quite a few over and above the Fed stance, which they have in fact toned down their hawkish stance a bit. But if you see a revival of growth in the United States, you might end up seeing some sort of reversal in Fed stance. So that aside, what are the other global factors that you're looking at, from the likes of the much talked about trade war between the two giants, US and China? It did play out to an extent in 2018. Do you see that? Do you see the potential of this factor, being played big enough in the new year as well?
Yes, I think you've brought me to the right point, Abhishek, I should say that, because trade war will have a large implication. The Chinese trade war with the US will definitely have a large implication to the Asian economy, not just the Chinese economy, because US runs a huge trade deficit with the Chinese region, which is to the extent of $500-600 billion a year. I think China will have to or will have to do more to make sure that US does not actually further aggravate the trade war. to my mind, and I think that will have a large implication, and it will not just have an implication to the Chinese region, but to the entire Asian region. Point two, because that will create a deflation kind of a situation in the region. So point two I'm making is watch out for this, because the implication is not just to China but to India as well in 2019, and fingers crossed, this could be one of the largest deciding factors, in fact.
The largest deciding factors. And that brings me to another potential factor, Feroz. And yes, I'm talking about crude and INR's movement, in turn. Now, most of 2018 did witness a lot of volatility on this front, at least, until late 2018. Now, how do you see that panning out in the coming year? Given India as a net importer and the kind of impact that crude has on various aspects, and also majority of sectors when you look at Indian equity markets.
Correct. I think crude is a very important factor from the perspective of currency, and also with respect to our deficit, current account deficit, and the fiscal deficit as well. So I think the deficits will have a large impact. Point one. Point two is that since it's a very volatile commodity, it has seen very large swings from 40s to 85s and back to where it is today. So point is, if one of your largest import is crude oil, and it is a very volatile variable, and it's not very easy for a country to hedge its imports as much as for a corporate to maybe hedge it using any of these exchange driven instruments. So an unhedged position, a largely unhedged position on crude oil, which is what the country runs, is definitely going to influence the capacity of the government to spend on different infrastructure projects, or to pump in money in the domestic market, and which will actually have a ripple effect and have a multiplier effect on the economy, is important. Because if the money is going to be spent on buying crude, definitely the domestic catalyst, which is government spending, can be impacted because of the deficits going up. So for every $10 movement per barrel, we have almost a 0.5% change on the current account deficit as a ratio of GDP, which is a large influence. And I think that will be one more variable. And I think the sweet spot of crude oil is where we are today. And fingers crossed that we don't see those levels of 80, 85, 90 back again. And it seems unlikely though.
Crude will continue to hold the key. Thank you, Feroz. That's it for this edition of Financial Planner. For more news and updates, keep watching Business Television India.